It's Jefford again from Rubik's Academy, and today we're going to talk about a stock or a company which I believe will skyrocket in terms of value in the future, especially in a post-pandemic future. All right, so let's go and find out what that is. Yes, Cisco Systems. Why Cisco? Because Cisco is a cybersecurity company, right? Now, for cybersecurity companies, I'm extremely confident in them for a very simple reason. Because after the pandemic, there's going to be a lot more interaction online. A lot of the work that is supposed to be done offline will be done online. And when everything, or rather anything, when anything shifts from offline to online, you tend to shift your data from offline to online. Now, that shift in paradigm was already happening, but with the pandemic, it's going to accelerate that paradigm. It's going to make it even faster. All right. So that's why when things get shifted to an online platform, be it cloud, be it a data server, whatever it is, you're going to need cybersecurity, and it's going to become a huge concern. We are practically going to have another life online, and you want that life, that identity to be yours and yours only. You don't want anybody impersonating you. You don't want your identity to be stolen. You don't want your data, your conversations to be tapped on. And that is why you need cyber security. Okay, so let's look at Cisco. Now, as per usual, I look at things from an all-time chart. You can see that in terms of the all-time chart, nothing exciting going on, except for the fact that you can see that Cisco has been overall on an upward climb. Okay, there's a slight trend here. All right. Okay, it's not a very nice trend line because it's very steep, but nonetheless, it is a trend line. Okay, and the trend line points to the fact that it is growing, right? Cisco as a company is growing. So you can see that Cisco was hit here in January, probably because of COVID-19, but then it bounced back very quickly. And looking at the state of things, I know that this fall, in terms of the effects of the pandemic, is going to be most probably going to be the final fall. After this, it's going to keep going up, right? Unless we hit a full-scale depression where all stocks fall, okay? That's a different story, right? But if we don't hit that depression, I have a feeling this is going to be its major retracement, and then now it's going to go all the way up and break above. So my view on this stock is bullish. It's bullish, okay? It's bullish, okay? So with that being said, let's take a look at RSI. Nothing much going on. It's stuck right in the middle. In fact, it's right at 50. What about ADX? ADX, very interesting. So from here to here, this area right here, you can see that there was a climb in terms of momentum. The speed was increasing. There was a real solid trend with great strength. Then it came all the way down, right? The trend of the strength came down. This was the part where the stock started to fall because of COVID-19 impact, right? Then now it's picking up again. And most importantly, it's 45 degree, right? So you can see that this stock recovered very quickly from COVID-19. To me, that's a good point, okay? So I'm bullish on this stock. Now the question is, where do I enter? And that question can be addressed when you go down to the 3-month time frame. So when you go down to the 3 months time frame, again, erase everything that you drew on the all-time time frame. That was to help you analyze the overall stance. Okay, now you're trying to find an area to enter. Where do you enter? Okay, where do you enter? Now, you can see that there is some support here. Okay, so there's a huge solid support here. And you can see that there was a resistance that was broken around here, right? It broke through the resistance. Okay, it broke through, it came down, but then it's going up again. So whenever you see resistances being broken and then there was a retracement and then it went back up, it just means that despite the best efforts to put the stock down, they weren't successful. Okay, and this happened in the period of May. Okay, so you can see that it wasn't successful, right? Now, and they weren't successful in a period whereby there was COVID-19, so that shows a lot. So now the question is, if you want to go long like me on this stock, where should you go long? Where do you see it continuing? Now, the best way, the easiest way, is you can do cost averaging, whereby you buy in at different levels, but I don't advise that. Usually, I don't mind advising you to do cost averaging if we weren't in a crisis, if we weren't in a potential depression. I don't mind advising people to do cost averaging. But now we are in a crisis. Anytime the tipping scales could be right there, the whole economy tips over and falls into a depression. And in a depression, all stocks fall. All right, that is there's nothing to debate about that. Okay, so I wouldn't advise cost averaging. Okay, you can do cost averaging for this stock, meaning that you buy in as it goes lower, so that your average cost per share goes down, CPS goes down in a non-recession period, in a non-potential depression period, but not now. Okay, so where can you buy in? You can buy in here. This is the first resistance, turn support. Okay, you can also buy in here. Another support. Okay, it depends on where you think the stock is going. Okay, so let me do a Fibonacci retracement, as usual, my favorite, right? So if you do a Fibonacci retracement to the current high, you can see that this particular line right here, okay, coincides with the 0.5 level of the Fibonacci retracement. Okay, and of course, so of course the bottom level coincides with 1, right? Because that's the origin point of the Fibonacci retracement. So you can actually do a long here because it coincides with 0.5, which is pretty good. All right, that's a good sign. Okay, and it's right smack at 0.5. It's right smack, right, almost right there. Okay, so for me, I'll be looking to enter here if there are no signs of an impending depression. If it goes all the way to here, then I need to understand what are the factors causing it to go there. I need to understand, okay? If those factors and the damage of those factors would have a protracted effect, meaning that it's going to stretch, then I'm definitely not going to go in, okay? So those are the technicals that I see for Cisco. Now, what about in terms of fundamentals, right? So for me, if I want to know what's happening recently, of course, if you are a long-time supporter of Cisco, you will know what has been happening, right? But for me, I like to go straight to the latest news, headlines. Okay, so you can see Q3 gets a boost from demand. So you can see that Cisco Systems beat quarterly revenue and profit estimates on Wednesday. So they are almost like a Zoom, you see. But the difference between them and Zoom is that they do what Zoom does, plus cybersecurity. So that's why I find this a long-term play, because both aspects marks the positive side of the paradigm shift after the pandemic. So that's why I like Cisco. Okay. Then of course, open 5G networks. 5G is the in thing, all right? It's the latest hype, the latest hoo-ha in tech, 5G, with Huawei leading the charge. And then you have Cisco to acquire Acacia Communications. This one, you need to go and study. What is Acacia Communications? What are they about? What does this mean for Cisco? You need to go and study. Okay, but overall, if you look at the top news, this is the Business Times, it's pretty good. Things are looking up for Cisco because even in a pandemic, their revenues are getting boosted. Of course, you may say, bro, that just means that after the pandemic, their revenues are going to come down. No, I'm going to tell you right there, no. It doesn't work like that. Okay, it's not a seesaw whereby one side goes up, the other side goes down. It doesn't work like that. We are looking at a paradigm shift. This is not a temporary solution. It is a permanent paradigm shift. What does that mean? It means that people are not going to just give up Cisco Zoom right after the pandemic. No, because over the pandemic, they have already cultivated that habit. It has become part of their daily lives. Yes, usage can come down by a bit, but it's not going to force Cisco shares all the way to before the pandemic. Doesn't work that way, my friends. Doesn't. Okay, and you have to understand that yes, people may start to meet more offline and less online if, let's say, this pandemic does become defeated, but that will not change the fact that there was already a paradigm shift before the pandemic from offline to online. So that's just going to continue. Well, no matter which way I look at it, it's a long-term play. All right, long-term means what? Long-term means that you buy this share, you at least wait for 1 to 2 years before you even consider selling off. That is what I mean by long-term. All right, so that's all for this episode. Thank you very much. Once again, my name is Jeffrey Lim from Ruby's Academy. I hope to see you in the next video. Thank you.